corporations now at the tail end of first quarter disclosures, and among them, Security Bank's net profit rose by 7% year-on-year in the first quarter, driven by higher revenues. The bank's net income was at 2.82 billion pesos in the first 3 months, translating to a return on average equity of 7.92%. Return on average assets went down to 1.01% from 1.2%. And based on its technical chart, Security Bank stock has pulled back once again after seeing resistance near 71.25. Ron Acoba of Trading Edge says the stock continues to trade within a broader downtrend, suggesting a prevailing bearish bias. Right now, the stock hovers near its support zone at 13-year lows. Acoba adds the stock must first break above 71.25 for a more sustained upward move. Well, with us now for more is Security Bank CFO Edu Olbes joining us in the studio. So good to see you, Edu. Welcome to the program.
Good morning, Kathy.
All right, so could you give us a bit of a reaction to the news du jour of the cabinet reset? What does it mean for the private sector, banking, and consumer sentiment?
A couple of points. On the positive side, I think it's refreshing to hear that I guess the government has interpreted the election results and tried to act on it. I think on the cautionary side, we live in uncertain times, and the sooner we can get past this with clarity in terms of areas of focus and emphasis, I think the better it will be for all, so we can focus on getting things back on track.
Right, consumer confidence really important for banking. Could you give us a bit of color in consumer confidence when it comes to borrowings? And because so far this year we've had a couple of event risks. We've had the midterm elections, and we've also had accumulated inflation really at record highs still, bearing down on consumers, and also the global policy uncertainties.
A couple of points. One, on inflation, actually things look better, meaning the inflation figures came in on the low end of the range this past period, which is a good thing. Suggests that the previous inflationary pressures are abating. Our hope is that with the plan changes in terms of tariffs, that we can maintain that on a go-forward basis. In terms of how we see consumer demand, from the perspective of Security Bank, we still see strong demand across our 3 consumer finance sectors, which would be home loans, auto loans, and credit card usage.
Well, to your point, the IMF just issued a report flagging risks to consumer credit that it bears watching. Would you agree with the IMF that it does cause some cause for concern for the banking industry?
It is typical that when you come out of an inflationary period that you have to be mindful of the risks in terms of the cash flow, both of your individual customers as well as businesses. And I think that's prudent to look out for those risks going forward.
Well, how is the bank now dealing with the Moody's credit outlook downgrade, which happened last month, with Moody's citing the possibility of the bank's capital ratio declining 13% because of the home credit acquisition?
2 aspects to it. First, Moody's actually confirmed the bank's very strong investment grade rating, which is a statement of fact in terms of where we stand today. The outlook, you're correct, was downgraded. And it's largely on the fact that they would like to see us maintain our capital at current levels, which is around 12% post-home credit transaction. And we intend to do that.
How? How though? Because there is concern that capital ratios might decline by below 13%.
The way the bank defends the capital ratio is to improve profitability. You saw that in terms of our first quarter numbers, and we intend to do that for subsequent quarters. And that will give us the capital necessary to continue to grow our balance sheet.
Okay, because there's a lot of other moving factors there. There's loan growth outlook, so pretty positive on your end. But there's also the home credit acquisition and the dividend payout.
Yes.
So if they all come together then, what is your outlook for capital ratio?
We look to maintain our capital ratios more or less at their post-home credit levels, which is approximately in the neighborhood of 12%.
Home capital, how does it benefit, though, your business? Because there have already been advancements in your consumer loan space. So folks are wondering now if there are any synergies. And what synergies would there be with the acquisition?
First of all, on home credit. Home credit is a dominant player in terms of the point-of-sale finance business, meaning they extend loans to individuals who largely don't deal with banks. So it opens us up to learn from the capabilities that they've built up over their decades worth of experience in terms of learning the needs of that space. It is covering a market segment which is adjacent to that of the bank. The business is extremely profitable, and we look forward to it being accretive to Security Bank in its first year.
First year, so are we looking to maybe a return on equity, double digits perhaps? You're at single digits, but the rest of the rivals are like at double digits, Metro Bank, BPI, BDO.
In the case of Security Bank, the journey towards double-digit ROEs is something that we've embarked on. We expect to end this year substantially higher than where we were last year.
Would that be mid double digits, single?
The ambition
lower?
is to get towards double digits, 10%. I suspect we'll be there hopefully by the end of this year.
All right, but you've gone into green finance. Pretty
Yes.
interesting news yesterday. You've already made membership in the Alliance for Green Commercial Banks. So what's the next step for being sustainable?
The journey actually is never ending in terms of sustainability. Our affiliation with that organization is because what they do is try to share best practices that they've seen in other markets so that we can tweak it and apply it as it's relevant in our case. We intend to be a leader in sustainable finance, and that's a critical aspect of us partnering with the right groups in order to be able to deploy the right tools.
All right, well, we'll watch that space. Thank
All
you
right.
so much, Edu.
Thank you.
Appreciate your time.
All right.
Edu Olbes of Security Bank joining us.